Good morning, financial algebra. We're going to be covering 6.5, which is called reducing your tax liability. So here's how it goes. The lower your adjusted income, the lower your tax liability. So there are a few ways to reduce, basically to take what you make, but reduce that amount so that you're liable for less taxes. And those are called deductions. So on our tax reform, and especially if you're a business owner, you're looking at ways to reduce your tax liability using deductions. So these are expenses that will lower your TI. Now, we need to remember TI is taxable income. There are a few things that will do that: itemized deductions, standard deduction, and tax credits. And there is a list of these on page 368. Another acronym you'll need to know is AGI, is adjusted gross income. So this is your income minus your deductions. So this is what your taxes are based on, is an adjusted gross income. We are going to be using Appendix B at the back of your book. It starts on page 720 to determine tax liability. So we're going to do a few examples. They're all pretty quick, and they should look like your homework. So Mike and Lisa had a combined wages of $91,000, but there are other forms of income besides your wages. So here is interest, probably earned in their bank. Here is just stock dividends, and here is a prize. So yes, you do get taxed on gambling winnings or prizes, or if you attend a show and you get a free car, you're taxed on all of that. So to find total income, they would simply add it up. So 91,301 plus 792 plus 667 plus 287 plus 530 plus 1,000. So you'll add all of those up, and I got 94,577. So that's total income. It's not necessarily adjusted, but that is total income. Next one, Paul and Mary had $78,000 in income from their jobs and their bank interest. They also had $2,139 of student loan interest and $6,000 in alimony. These are both deductions. So you take his income and you subtract. And if you're wondering, alimony is what like if two people get divorced, the person who made more money sometimes makes an agreement to pay the other one alimony, and that alimony is not taxable. So he paid $6,000, and they also have paid $2,139 in student loan interest. So we're going to subtract both of those because they are deductions. So they're decreasing your taxable income to give a total of $69,972.19. All right, next one. So here is their gross income is $119,245.61. This is their AGI, adjusted gross income. Now it said that they had $14,191 in medical expenses, but their insurance covered 80% of these. So if 80% is the insurance company, then 20% would be what was paid by this family. So I'm going to multiply their expenses by the 20% to see how much they actually paid out of pocket. So that gave me $28.38.20. Now it says that the IRS will allow for expense deductions that exceed 7.5%. So I'm actually going to multiply this amount by 0.075, their AGI. And I got that 7.5% of their income is $89.43.42. This amount right here does not exceed, so this is their insurance costs, and it doesn't exceed 7.5% of income. So how much can they claim as a medical deduction? Nothing. They don't get to claim a deduction because their expenses did not exceed 7.5% of their income. I'm going to skip number 4 because your homework is only on ones that you're actually computing. All right, so the Holfester family took 5.5 hours to gather information for their Schedule A, but the itemized deductions saved them $4,095. So what was the mean or average savings per hour? So I'm simply going to take their savings and divide it by the 5.5 hours. So $40.95 divided by 5.5, I get that they saved $744.54. This says round to the nearest dollar, so $7.45 per hour. It's a lot of money to save just for filling out your tax paperwork. All right, next one. So sometimes when there's earthquakes or hurricanes or tornadoes, it damages your home, and the IRS will let you deduct part of those damages. So this problem is going over those facts. So they had $9,441 worth of hurricane damage that was not covered. Now, the IRS requires that $100 be deducted from each casualty. So $94.41 minus 100 equals $93.41. Their adjusted gross income is $67,481. Find 10%, so $67,481 times 0.10 gave me $6,748.10. Their Schedule A casualty deduction can be found by subtracting 10% of the adjusted income from the answer to Part A. So you take the answer from Part A, subtract the 10%, and that's the amount they can deduct. So $93.41 minus $67.48 and 10 cents, they can deduct $25.92 and 90 cents. So they can deduct $25.93. Okay. All right. Number 7. So Jessica is a single taxpayer. That's important. She has a taxable income of $77,989. She learned after filing it that she could have deducted her student loan interest. So using the tax tables, how much would the student loan save her? So let's find out her original liability. And then let's subtract $77,989 minus $876. So $77,989 gives me, minus $876 gives me $77,113. So let's look at both of these in Appendix B. So Appendix B breaks down your income very slowly. So I have to turn to the pages that are in the 70s. So the first amount, and remember she's single, so you're going to be looking under the single category. So for $77,989, I got that she would be liable for $13,013. If she had used the deduction, $77,113, I have that she's only liable for $12,826. So the difference should be what she would save. So $13,013 minus $12,826, and I got that she would save almost $200 in taxes. So it's worth, if you are working or when you start working, to have someone look at your taxes, have a professional so that you don't miss anything. Number 8 is review. So here are the wages. It's review of how to fill out Social Security and Medicare. So remember, Social Security is 6.2%. Medicare is 1.45% of your wages. So 63,009 times 0.062 would mean that taxes withheld for Social Security should be $39,0656. And for Medicare, man, I cannot talk today. You're going to multiply by that 0.0145, and I got that those taxes should be $9.1363. All right. So here is another problem. Now this is MFJ. Remember that is married filing jointly. And you get a big tax break if you're married filing jointly. And here's their taxable income. So back to Appendix B, $82,500. So $82,500. Now remember, this column up here also says $82,500, but it has to be less than that. So you go to where it says at least up above. It says at least, and then go down to $82,500, and then go over to married filing jointly. So $98.73. So $98.73. Now they received a tax credit of $2,100. So $98.73 minus $2,100, and now their tax liability is $77.73. And then it asks, if they withheld $10,000, do they get a refund? Absolutely. If they withheld $10,021 and they only are liable for $7,773, then they get a refund of $22.48. Last problem. So Mike is single. His TI, taxable income, is $42,384. He was able to reduce his income by $46.75 using schedules A and 1. How much did he save in taxes? So we'll look up the original tax liability for the original amount. Again, in Appendix B. Make sure you look under single. And then let's find out what is his new taxable income minus his deductions. So $42,384 minus $46.75. I'm now looking at an income of $37,709. So I'm looking at those two amounts in the back, and he's single. So for $42,384, I show that his tax liability is $51,081. And for $37,709, I show his tax liability at $4,000. So if I subtract these, I get that he saved $848. If it took him 3 hours to do it, then he saved $282 and $67 per hour. And that completes those notes.